Hey, what's going on, folks? This is Shadow Stars chiming in today. What I'm going to be doing is giving you a preview as to what I think will happen for AMC's quarter 3 earnings, which is coming up tomorrow after market close on November 8th, 2022. Um, Here I'm at the AMC Investor Relations page, so we know keep the earnings. They'll have their earnings webcast at 5 p.m. Eastern, and I'm going to just cover what I think, what numbers to expect, and I'm going to go over some of the information that I use to help determine what I think AMC will do. So what I'm going to do is I'm going to pull up this Excel spreadsheet here. And this is a table I've compiled with various different sources and their analysts and what they all expect AMC to do in regards to their earnings. So we got Zacks, Earnings Whisperer, CNN, Benzinga, Market Beat, Forex, Tip Ranks, Seeking Alpha, Barron's, Wall Street Journal, Market Screener, Alpha Query, and then this is my own official prediction. So this table shows revenue on the low side, revenue on the high side, EPS, earnings per share on the low side, earnings per share on the high side. This is my figure here. I'm predicting that maybe on the low side, 927.2 million, high side, 1.02 billion. My guess, more so in the middle, let's say 973.6 million is the revenue. Their EPS ranging around best case scenario negative 0.27, 27 cents, and that's the best case scenarios. Worst case scenario is negative 35 cents. If you go through all the analysts, most of all, you're seeing within that 960 to 970 mil range, it seems like, for the most part. A lot of 961s. EPS, no one's expecting them to report a positive EPS. They're all expecting anywhere from negative basically 22 to negative 31. So you're looking at probably roughly around negative 25, negative 27 earnings per share, loss per share. So how did I come to that conclusion? What I did was I compiled a lot of data here. I've pulled, this is all information from their official SEC filings, so for those curious, you can go to the SEC EDGAR site, type in AMC, you can pull up their 10Qs, their 10Ks, their quarterlies, and their annual reports, and look through them. I grabbed all this information here. So this is their most recent quarter that they reported on Q2 from their figures. And I've just put this all into an Excel spreadsheet. So what I've done here is, for example, I've compiled the information for 2018, compiled it for 2019. Obviously, 2020 I didn't include because those figures are going to be very skewed out of whack. 2021 I included, but we already know that perhaps the first 2 quarters of 2021 are heavily skewed also. So they're not going to be too reliable. But Q3, Q4, the thing to note is really the recovery rate, the rate in which they're improving, and to see if they're on that trajectory, if they're on their path to dig themselves out of this massive hole. And obviously I do have Q1 2022, Q2 2022, and then the Q3. So the thing to really focus on for me, I'll pull it up directly on their filings, is how much revenue are they bringing in? So right here, under this, you'll see their total revenue, $1.16 billion. This was Q2, and remember, how was Q2? Q2 was stated with a lot of fanfare, big releases. So for example, I'm going to pull up box office figures that IMDb Pro Box Office Mojo compiles. So Q2, if we take a look at it, for this year, 2022, domestic gross was what? $2.3 billion. So how does that compare to previous years? 2019, you had Avengers. Amazing numbers like here at the box office. 3.2 billion. 2018, 3.3 billion. 2017, 2.7 billion. Nonetheless, $2.3 billion. How's that rank compared to previous? How far do you need to go back for 2.3 to beat figures? You won't go back. You'll have to go back all the way to 2005, right? And we can just see number of releases too. It's down. So we know that hey, there's less releases that are coming out, and also as a result, less cumulative gross. So the whole point is that hey, movie theaters aren't fully recovered. The question is now, how much more of that recovery do they have left? Are they ever going to go back to these heyday figures? Basically, anywhere from 2.8 to 3.3 billion dollars a quarter. One thing to also note, let's take a quick look here, and I'll show you. These figures here, so 29, pay attention to 2019 to let's say 15. What's the range? 2.4 to 2.9 bill, right? And then what did Q2 do? 2.7 to 3.3. So Q2 does better, right? Q3, what happens Q3? 2.5 to 2.9. And Q4. 2.8 to 2.95. So we already know, common convention, common wisdom says that hey, Q2, Q4, your best quarters, get the most revenue, most big time releases coming out, the big hits come out. In general, they tend to come out during those 2 quarters. So you'll be the most profitable during those 2 quarters. And Q1 and Q3, usually much slower. And this is not really contested. This is commonly known. If you don't know, that's what the facts are. You'll know that the CEO of AMC, Adam Aaron, even he notes that, hey, Q3 going to be slow. And once again, to reiterate this point. For example, 2018, I have AMC's breakdown, quarter by quarter. What's the revenue? Q1, Q2, Q3, Q4. Most revenue during what quarters? Q2, Q4. Q3 was their slowest. Similar, you can just also look at their attendance figures. Q2, Q4 highest. Q3 was the lowest. So we can expect that Q3 is going to have less revenue. Q2 was 1.16 billion. This most recent Q2 2022. So we know that hey, Q3 is going to be less than that. But hey, Q1 versus Q1, Q3 might be better. Q1, you could also still make the claim that hey, you know what, maybe not everyone was feeling safe of going out. Maybe there were still some restrictions. So okay. So you expect that somewhere between these 2 lines, two figures, between 785 million versus 1.16 billion, the revenue would fall around that range. That'd be common guessing. And the thing is that, hey, let's pull up box office figures though. Q3, we already know what cumulatively what Q3 has done, because Q3 runs through July through September. We're in November now, so we already have the figures of what the movies have done. So how does this stack up? 1.9 billion domestically. How does that stack up with any of the previous quarters previous years, same quarter previous years? how far back would you need to go? A 1.92? Dang, you haven't seen that. Strictly on numbers to 1998. And obviously, we know that to a certain degree, inflation plays a part in it. But nonetheless, inflation does not explain the massive difference, let's say, the last 5 years. And also to note, ticket prices have gone up since these days of 2015, 16, 17, 18, 19. Ticket prices have gone up. Food and beverage concessions costs have gone up. Everything has gone up. We know that in the current world, especially if you live in the US, you know what the inflation is. Inflation is sky high. So part of my way of predicting what the earnings is going to be is based on, hey, how much did they do Q1, how much did they do Q2, and finding a range in between where I think it makes sense. So to help organize the data, I just strictly did it on a quarterly basis. And what I did was, this is my own very rough metric, but I've tried to figure out, hey, what percentage of their revenue comes from the major categories? So admissions, what part of admissions is their revenue? So total revenue, admissions, approximately 56, 55, 56. You can pull it on the yearly scale, and you'll see that, hey, yearly they range around that 60-something%, low 60%. So whatever revenue that they do, you'd expect, hey, maybe if it's on the high side, 60%, if it follows more along the current trend of past quarters performance, 56, 57, 55 to 57 range would be expected. So you know what? I plugged in a rough estimate, 56.15%. That's what I expect admissions as part of the revenue. That's for Q4, and Q3, 55.81. I'm sorry, 56 for Q3. I didn't put in the percentages for Q4. Food and beverage, hovering around that 33% range, and historically they're around the low 30s, 30-31%. And then you have the other / miscellaneous revenue. And nonetheless, basically what I expect them to do. How much money did they make from admissions, how much from food and beverage. So let's look at their operating costs then. They have a set amount of fixed costs to a certain degree. And let's look at, hey, how much of the cost of this film exhibition could be attributed to their overall versus their revenue. So film exhibition cost as a portion of their revenue from admissions. Food and beverage costs as a percentage of their food and beverage revenue. And across the board on a yearly basis, we're looking at the 49 to 52 range. Food and beverage, basically that 16% range. And that's holding true, basically, except for, obviously, the film exhibition cost. But food and beverage seems to be hovering around that same 16%, slightly higher on the quarterly range. But nonetheless, I use a 50% calculation for Q3 and 16% for food and beverage. And other major costs, operating expenses. Are they making any big changes in how many places that they're operating? Are they getting rid of a lot of theaters? Are they adding a lot of theaters? I don't see a massive change in that. So I would expect, hey, Q3, you're going to have similar operating expense costs. And that's the most optimistic. In reality, the operating expense probably went up. We know that the cost of living, inflation, is definitely kicking in. Everything's becoming more expensive. Labor is becoming more expensive. People expect to be paid more. So your operating expenses, I'm sure, might go up. But you know what? Benefit of the doubt. Let's say, give them a slight discount. Just make it easy, round number, 400 mil versus what they did previous quarter, 402 mil. And rent, similar story. I don't really see them ditching a lot of theaters to make a big difference in that, a big dent in that, nor are they expanding a lot. So, give them the benefit of that, rounded that down, 220 mil. And depreciation, similar story. I also looked at historically. There's a yearly basis, and we can look at quarterly basis. Previously, rent that hovers around, back in 2018, basically sub 200, although the last two briefly ticked over 200 mil, and then 2019 spiked up to 240. And depreciation, nonetheless, 130s, 110. So basically, I follow along the lines what the previous two quarters have done. So 220 and 100. Now these are the major costs. There are also all sorts of other costs. So if you pull up their actual, you'll see. Film exhibition costs, food and beverage, operating expenses, rent, whatever administrative mergers, other depreciation, amortization. This was excluding the depreciation. So nonetheless, those costs. So how is this going to come out? How much revenue are they going to make, and how much costs are they going to incur? Well, what happens when you spend more money than money that you bring in? You operate at a loss. And if we go back to all the different analysts, their revenue expectations, let's say the most positive, let's say 900, and let's take Zach's, 980 mil to make it easy. We plug in 980 mil as their total revenue, but their operating costs, we're expecting them over $1 billion. So they're running into a deficit, they're running into a loss. Now, we gotta look at corporate borrowings. Those other expenses, those interest payments that they need to make. That's also another cost. So that's not gonna change. So, I got a calculation here. I think that, hey, they're going to be running approximately, if numbers hold true, these percentages hold true across the board, about $182 million deficit, their net loss. Sure, there might be some fluctuations. Oops, sorry, I got a little alert. You need to consider also a couple other factors. Let's see if I can find it here. While I find it here, I'll be talking about it. Is that AMC is not a company that operates just in the U.S. It operates over the world. It operates in Europe. I'll just search it. International. The whole point is I want to show you their revenue split. There we go. So here we go. Revenue in millions, US markets versus international markets. So the previous quarter two total was 1.16 billion, of which 900 and almost 8 mil. I need to turn off this soon. 908 mil. And international was 258.5 mil. So you got a certain percentage, let's say, make it easy, a third. You want to do super calculated, so 1166.4. So actually it's really less than a third, 22%. 22% of their entire revenue is from overseas. Tie that all into the fact that, hey, you know what? How is the US dollar and how are foreign currency exchange rates affecting the company? The strong US dollar is going to put pressure in these international markets. So the revenue that they make there is going to be decreased. So my calculation is basically you can also break it down by month. I grabbed the same data from this website, Box Office Mojo from IMDb Pro. Grab their quarterly figures, break it down into months, and let's do a comparison of, hey, how much down, even on the domestic level. We know that almost 80% of their revenue is from the US. So how much of that of an impact is there? So if quarter two did 2.3 billion and quarter three did 1.9 billion, how much of a decrease is that in overall domestic box office? Obviously, AMC isn't the only movie theater company that operates in the US, Canada, and Europe. But AMC is a big player. So they're going to be impacted if the overall whole market, the industry itself, if the domestic box office is saying, hey, we're seeing less money, AMC is going to make less money too as a result. The split of how much each company gets impacted, that's a different story. But nonetheless, there's going to be an impact. So, another quick easy math thing. Let's say Q1, Q2. Add those figures up. That's what you got right here. Find the middle point between Q1 and Q2. Bam. 1.8 bill. Well, they did better than that, the midpoint between Q1 and Q2, right? So you would expect, hey, you know what? Midpoint of revenue between Q1 and Q2, they probably did better than that. But once again, remember that near 80% revenue split between US versus international markets. International markets probably took a hit. But a couple other factors to consider is that, do I have it here? This is another site I found, UK Cinema Associations, and this is monthly admissions. So they haven't broken down by month, so we can just plug it into quarterly figures. But nonetheless, hey, it's decreasing. Q1, Q2, Q3. From Q2 to Q3, hey, nearly a 15% decrease. Factor in the foreign exchange rates. You got to consider that type of hit. So overall, that 20% of revenue that's coming from overseas, that's not going to be as positive. So that's kind of how I came to a lot of my number calculations. So what does this mean for the company in total? The company is expected to lose money. There's no analyst that's saying, hey, you know what, they're going to be making money. And you know what, it's Q3, okay. And a lot of people on the other side are saying, oh, you know what, yeah, we know Q3 is going to be bad. The CEO said it's going to be bad. But we got Q4. But okay, let's talk about that. Let me pull up. Q4. Q4 is at the peak of how well the movies were doing. Anywhere basically around that 2.9 billion range. 2.9 billion. Well, 2022, we already have some figures out. I pulled these, did a day or two ago. And only 543 million. Today is November 7th. We have less than 2 months. How in 2 months is it going to be able to make a dent to beat these figures? What do you need to do? What sort of numbers do you need to do? So let's say 2.95 billion. You need to do $2.4 billion to beat more than 2.4 billion to beat 2018 figures in under 2 months. So you know what? Let's look at the monthly then. You had June and July of this year. You had Top Gun saying Top Gun was the best release in quite some time. And you can see it here, Top Gun. 2022, June and July. They only did, in a month, under a bill, and 1.1 bill. And what did we say again? They need to do 2.4 bill in under 2 months. Is that going to be possible? Yes, you got Wakanda coming, Wakanda 2 or whatever, Black Panther sequel coming out. How much time do they have on that release? Is it the full 2 months? No. Same thing, Avatar sequel, is it Avatar 2? I don't know what it's called. Whatever it's called. When is that coming out? Last I recall, it's coming out like mid-December. Wakanda 2 is like mid-December or mid-November. So you don't have that full period of those months. So can you expect it to do crazy figures? Will it beat those figures? No. So Q4, in my honest expectation, your best case scenario, they do, let's say, 2.96. That would be smashing expectations. So like here. You would be on the level of 2018. So if you beat 2018 figures, if you beat 2018 figures, you'd finally turn a profit. But this scenario, I say very unlikely. You'd have to do monster figures, like I said. Q3, their figures, it's down 18% versus Q2. You'd have to do monster figures to get from Q2 figures to Q4 figures. And most likely, they'll maybe, will they even break even? I don't think so. So they'll have another quarter of burning money. So Q3, they're losing money. Q4, they'll lose money. And what happens? Q1, you're back to another slow period. You're burning money again. So you have Q3 you lost money, Q4 you lost money, Q1 you lost money. Is Q2 of 2023 your saving grace? Is that going to be the quarter where they finally start breaking even, where they don't have a net loss? And now you got to consider, what is your cash burn rate? If they lose 180 million this quarter, let's say they absolutely break even, the best case scenario, next quarter on Q4. Okay, so you went from 965 million. Oops, sorry, it's plus because it's a negative value. You're down to 783. Well, come Q1. Well, let's say basically Q1 was really bad, but let's say they have another Q3-like performance in Q1. Down to 601 million. That's under really, really good conditions. Not to mention, you have debt. This is also important to pay attention to. Their financial covenants. They have minimum liquidity requirements. What, 139.5 million? They have, what, 5.4 billion dollars of debt. When are they going to pay down all their debt? But I'll give you one thing. One positive thing is that, hey, ape and ape dilution occurred. So you've raised money. How much money? I don't know. I don't know how many shares sold, how much money they were able to raise, what price they were sell those shares. I don't know. But nonetheless, if in end of Q1, best case scenario, they're down to 600 mil, they got minimum 130 plus mil that they need to have on cash. They have debt that they're going to continue making payments on without being able to really shrink the amount of debt that they're carrying. The worry is this. What's their total assets versus their total liabilities? Let's look at the year-to-year comparison. 2017, assets, 9.8 bill. Liabilities, basically 7 mil. Or bill, sorry, 9.8 bill versus 7.7 bill. When does this flip? This flips back in 2021, where your assets are now less than your liabilities. These quarter figures, same story. Your assets are shrinking at a faster rate than your liabilities because you have no way to really make money. You're burning money faster than you're making it. So you're currently surviving based on a whole lot of dilution. Dilution that no longer can happen for regular AMC shares because shareholders blocked it. But shareholder dilution still is possible on APE. So, video comes down to this. I think that, you know what, AMC, the revenue, it'll come around this range. I mean, best case, basically a bill. But nonetheless, I'm guessing their EPS gonna be negative, between that, around that negative 30, 31 cents. Q3 was not good. Expectations that Q4 is going to be amazing is, I think that's a pipe dream, because we need to take into consideration global factors, overall macroeconomic factors. How's the world economy doing? How's the US economy doing? What's inflation doing? If inflation is sky high, people have less discretionary income. They have less discretionary spending. If people are paying from $2, $3 a gallon at the pump, and they have to pay $4, $5, $6 a gallon at the pump, instead of paying, let's say, I don't know, $3 per gallon of milk, now you're paying $5 a gallon of milk. Bacon that used to buy for $3 a pound is now $6 a pound. Everything, the cost of everything has gone up. Your rent is going up. Interest is going up, so interest payments, you have mortgage. Everything is going up. You have less money to spend because your wages aren't following that. Well, you have to cut your spending somewhere. And what happens? Movie theaters? That might be a cut. You may no longer want to spend $10, $15, $20 a ticket at the movie theaters. You don't want to be spending $5 for a drink. You may choose, hey, you know what? There are other avenues. You know what? Maybe I'll just stream something. Maybe I'll stream Netflix, Hulu, Disney Plus, whatever, HBO. There's tons of different streaming options. Maybe that's an option. People in general are spending less money. They're feeling more pinch on their pockets. Personal savings is decreasing. It is now below, it's basically like pre-COVID levels or lower. Credit card debt is hiking, it's spiking. It's at the highest levels. We haven't seen these high levels in 20 plus years as far as I know. How does that present a positive outlook for a company like AMC, a movie theater chain? It's one thing when the economy is booming and everyone has all this extra money to spend. Yeah, sure, they got no problems going to the movie theaters. But if you have less money to spend, you're going to go out less. You're not going to go to those amusement parks. You're not going to go to concerts. You're not going to be going to restaurants as much. Maybe you're not going to be spending as much time ordering food for delivery. You can look at DoorDash, Uber Eats, Grubhub. Look at all their metrics. Growth is slowing. You see a lot of companies doing layoffs, whether that's Twitter, a lot of tech companies, Twitter, Facebook, Google, other tech companies reporting slowing down of growth. You can look at semiconductors, NVIDIA, Intel, AMD, or even the semiconductor manufacturing like TSMC. So overall, it doesn't look good. The price, how do I get rid of this? Combined value of AMC and APE is now down to $6.86. The stock's fundamental value is only going down further and further. The company is facing more headwinds. Sure, Q4 is supposed to be a better quarter because better releases. But that does nothing if you don't have that consistent stream of all those big blockbuster hits over and over and over. If people aren't willing to pay that money, all that money to go to the movie theaters, to buy those tickets, and to buy those concessions, the company's not going to be profitable. Because look at the profit margins on where they make their money. The movie theaters aren't making a whole lot of money just based on their admissions. The revenue margins, they're going to be making a lot of their profit from food and beverage. That's why you pay those crazy high prices for popcorn, for candy, for soda. Movie theater studios, they'll take big chunks out of ticket sales as their cut. But food and beverage, they mark the hell up out of it so that they can make money off of it. So, Q3, not good. Maybe not their worst quarter. I think it'll certainly be better than their Q1 performance. But it's not going to be a good quarter nonetheless. Expecting Q4 to be your savior is not the option. Sure, it'll be better than their Q3. Hell, maybe it'll be better than Q2. But I don't see it being so spectacularly good that, hey, you know what? They'll turn finally a profit. Not with macroeconomic headwinds. So you're going to have 3 quarters. Q3, this most recent, just reporting, Q3 is bad, Q4 is bad, not as bad as Q3, and Q1's will be bad. You got 2 straight quarters of headwinds, basically 6 months where your company is going to be probably losing money. And even if Q2 is amazing again, it's not enough to make a dent in all this debt that they have. All this debt that they have, this $5.4 billion. When are they going to pay it off? When are they going to become cash flow positive? Don't get sucked up in this pipe dream of what they call, oh, shorts have to cover. I wouldn't put my belief in any of that. Shorts are over leveraged. No. There is a bear thesis, there's a short thesis on this company. If the fundamentals get worse, more people are going to pile on into them. Don't believe in conspiracy theories. Look at the numbers in front of you. This is hard, cold facts. These are numbers you pull right from the SEC website. This isn't manipulation. These numbers aren't manipulated unless the company itself is lying. These numbers are giving you a sign. They're telling you something. Read through it. Save yourself the trouble, because Q3 earnings is bad. Q4 earnings, it's not going to be that good. Save your money while you can. And with that, I'm just going to wrap it up. I'll be doing a post earnings reaction. I'll probably go live actually, stream what I think of earnings, going over the earnings numbers, and then I'll tune in to part of their webcast at 5 p.m. But you've been sold an absolute pipe dream, something that's never gonna. You've been sold something that's never gonna happen. And this all could have been avoided if you looked at their financial records. So, do what you will, folks. Obviously, I'm not no financial advisor. This is just someone who's just a regular investor. I'm a retail investor. Got some of my Weeble orders. I've been playing some options today. just a retail investor, just doing some basic research, looking at financial statements, and putting money where my mouth is. Company that's not profitable, I don't think will do well. There's no terrible market manipulation. And you expecting that your couple, maybe 50, 60, 70,000, hey, maybe you got a whale account over 100,000, $400,000. You think a couple of those will be taking down Wall Street if they have some sort of terrible manipulation going on? No, these folks have billions and trillions of dollars. They're not going to bat an eye at small accounts like that. You're not going to be able to unearth any problems, even if there were. There isn't to begin with, but you thinking that your small accounts will? Makes no sense. There's plenty of other places where you can make money. So, be smart about it. Educate yourself. Don't go falling into rabbit holes of tinfoil hat conspiracy theories. You don't need to go through that to make money. All you need is, hey, you know how to read these? You get a good gauge of how a company will run. Pair that up with some technical analysis, and you'll be pretty solid. You'll be making money. So I'll cut it off here. I've been chiming on long enough. Hopefully this has been helpful to some or educational to others. Until next time, folks, Shadow Stars out.